Good afternoon, good morning, good evening, wherever and whenever I guess you're watching this latest video podcast. With you as always, Matt Cormier, Michael Seatner. And as you can see, joined by another guest today, this is Graham Smith. Graham works within our retail sales and leasing team, which, as you can imagine at home, have seen quite the dramatic year. Graham,
It
maybe
really
we'll
is
obviously.
amazing, Matt, is retail has been the story so far over the past year, and it's finally time that we brought in an expert on this because, Matt, you and me are office people, and a lot of our audience are tenants on the office side, and that's really been the angle. But retail is such a story, just as we're all users of it, and to have an expert separate some of the noise about what we think is going on and actually turn that into real data of what retailers are currently suffering from and doing right now.
Yeah, and I think Graham will probably explain changes were already happening in retail pre-COVID that are just going to be accelerated. So Graham, maybe for the audience, give them maybe a little bit of background of where we were late 2019 into 2020, obviously what happened when COVID hit, and maybe a recap of where we are today.
Yeah, absolutely. I guess first and foremost, gentlemen, thank you for having me on the pod. Excited to join my fellow colleagues here. But certainly on the retail side, I mean, I think it's the understatement to state that there's been a tremendous amount of upheaval in terms of the overall retail landscape. So end of 2019, early 2020, retail velocity and the health of the overall market was extremely strong. Just as a quick backstep, I co-lead the agency retail group here at JLL, where we exclusively represent landlords and developers almost exclusively in urban downtown Toronto. So any commentary on the market is really hyper-focused on downtown urban Toronto. So there were about 4 or 5 buckets of retail uses that made up the majority of the overall, demand in the marketplace. So food and beverage, that not only encompasses large format, but also boutique fitness, a lot of health and wellness, professional services, and then, there's some quasi co-working retail concepts as well. So we saw tremendous amounts of, growth from all of those categories. All of a sudden, March 2020 hits, and pretty much every single category pumps the brakes extremely hard, and really they haven't come back since. We get asked the question a lot, well, what are the retail categories that are, active in the marketplace right now? And it's simple. I think at a very high level, it's cannabis. We've all seen the tremendous surge in the number of dispensaries. I wish it was being regulated a little bit more because I think some streets are getting overly diluted. Queen Street West is a great example in terms of number of cannabis locations, and they're ultimately going to cannibalize themselves. And a lot of really small format food and beverage, so quick service, QSR concept still remained active, that are really looking to just get a location that can service grab and go pickup, and obviously a lot of the Uber Eats and Fedora and technological deliverables as well. So besides those is the kind of the 2 main categories, and this is generalizing, but we really haven't seen any other category come back with any sort of real momentum. And in terms of square footage, there's been very, very little demand in the marketplace for any retail of notable size. So over, 3,500 square feet. So it's certainly been challenging. And I think at various points within the lockdown cycle, when we started to open up, you can start seeing early indications of tenants picking up the phone and wanting to get back out, and retailers looking to tour space and potentially offer on space. But certainly this most recent lockdown has put, again, another halt pretty drastically to a lot of those conversations. So it's been definitely a challenging 12 15 months in retail for sure.
So curious on the whole mom and pop thing, and maybe kind of a big macro picture. People are worried that with all these lockdowns and going into our 3rd one here in Toronto right now, this is like the death of the mom and pop retail, death of the restaurant. I'm curious to know what's actually happening. Are a lot of these guys expected to survive? Are they going to be replaced by bigger boxes? Are people coming in and trying to capitalize these smaller restaurants and retailers so they can survive? What's happening with those little guys?
It's a good question, and I would actually answer that by saying it's very landlord dependent right now in the overall marketplace. So again, painting with a fairly broad brush, but we found that, publicly traded landlords, to not name any names, I think are a little bit more inflexible, because if they start, getting rid of these tenants, it's going to negatively impact their book value, which will then negatively impact their share price. So if you're a mom and pop in, let's call it an institutional portfolio, and the landlord is unable to provide as much rent relief as a high net worth private, ultimately, I think they're going to have a very tough go of it. And then on the flip side, if you have a private net worth individual as your landlord that maybe is a little bit more empathetic to the overall situation, and is willing to work with the tenant in terms of, rent relief, they potentially might have a little bit more staying power. But I think in either of those situations, one thing that has become clear as we just started marketing some second generation restaurant spaces is that there's going to be a very strong built up demand from retailers and specifically restaurateurs looking to lease second generation retail spaces where they don't have to build out the space completely from scratch.
Yeah, we've been talking about that a lot on the office side right now. There's demand for ready to go space, both in the sense of there's a lot of uncertainty on when people will be back. So it's a lot easier to turn that valve on essentially and have people back in your office. And also there's no, there's not as much capital there. If people can reduce the amount of capital that they need to spend to get into space, office or retail apparently, there's an advantage, there's an appetite there. So nice to at least hear there is that appetite behind the scenes.
Yeah, the capital expenditure is certainly going to be an interesting thing to monitor. I mean, if you were a traditional restaurant pre-COVID and you were taking 5,000 square feet, for a very high-end build out of, say a Charles Caboose level restaurant, you could spend upwards of $800 a foot, right? 5,000 feet. So you're plus or minus $4 million. But in some cases, if you're getting a second generation restaurant, you could be, retrofitting it and just updating the key visual designs for probably, $500,000 to $1 million, right? So capital savings.
So how about the other side?
I saw something on Instagram that was a Mexican place took over a Chinese restaurant that just drew sombreros on the pandas on the wall. So I get the point about trying to take advantage of existing leaseholds.
That's the lipstick on a pig renovation.
No kidding.
We're ultimately trying to avoid that for our landlords.
But how about the flip side to that coin then, Graham? Are ownership groups stepping up to say we're going to start putting capital into deals? Was that part of the market pre-COVID? I know in our market there was no capital put into deals with landlords in downtown Toronto pre-COVID. That's changing now. We're actually seeing landlords fully turnkey spaces again. Are you seeing a switch there? I guess you have more mom and pop ownership groups than we do, certainly.
Absolutely. No, I think, at a very high level commentary, there's certainly upward pressure on overall inducements across the key financial metrics. So, whether it's TA or free rent or longer fixturing or induced landlords work. Absolutely. And I think a number of landlords are now evaluating hybrid deal structures where, the first year to 2 years and maybe even beyond are only percentage rent. Again, speaking for restaurant.
Yeah.
But we've seen a little bit of that in the fashion side as well, where percentage rent deals are being offered, which was completely unheard of, 12, 15 months ago. So certainly, very flexible deal terms are being offered to capture retailer and restaurateurs' interest.
And I guess that's going to be exciting from, sorry, Mike, last point on that. That's exciting from your point of view, though, representing these landlords.
Absolutely.
Yeah. Like that's one thing we're enjoying right now on an office side is you can actually be creative with deals again. We'd gotten to a point in late 2019 into 2020 where it was, here's your paperwork, take it or leave it. It was really that simple. And we were actually able to start creating deals again, creating structures again that worked for our clients. So I'm sure you're seeing that on the landlord side right now. It's nice to get your hands dirty again.
Absolutely. I would echo your comments. It is fun to see these hybrid deal structures and get creative. And I think again, every asset's completely different, but we've been fortunate enough to work with some landlords where, the retail only made up a small portion of the overall GFA of an office building. And in that instance, they were able to really target some creative up and coming entrepreneurial concepts and they weren't concerned about squeezing every ounce of value out of the net rent side. They just were really focused on driving the amenity or the value to the end office users. And it was a hybrid deal structure that I think was hugely advantageous for the tenant, but also a win-win for the landlord. So,
Great. Yeah, that's great.
What about some of the metrics like rents and vacancies? Have rents moved? I mean, institutional market like ours in office, rents don't really move unless they absolutely have to. I'm curious if landlords are also trying to drop rates, and correspondingly, vacancy. Has vacancy really increased in that market, driving that? And do we expect there to be, 20% of vacant retail spaces next year on Yonge Street?
yeah, absolutely. It's a good question. I think if you were going to focus first on the two main fashion runs in Toronto, so Bloor and Queen Street, both are at all-time highs in terms of availability right now. So obviously with availability puts a lot of significant downward pressure on overall rental rates. It's really tough to say where rents have, amended to, because the truth is there really hasn't been a lot of deals that have actually been finalized. Right. So there's very few examples that you can look to of a market being reset. But I think it's fair to say that in most cases across all the major streets downtown, we're certainly seeing, rental rate pressure, where rents have alleviated, 10 or 15%, in some cases even more. But again, it ties back to the overall landlord. Some landlords are willing to provide, hybrid deal structures that provide a little bit more flexibility in the initial years. But one additional point I did want to make too on the overall leasing side, as I mentioned off the top, we're hyper-focused downtown Toronto, and we estimated from just our own business, certainly within 2020, that overall leasing velocity downtown was down about 80% on the leasing side. So a huge reduction in terms of the overall deal momentum that we would normally see. And also that just speaks to the tenants in the market. There's just very few tenants in the market. So when there is a tenant, certainly it's wise if you're a landlord to do your best job to be able to capture them and secure the tenant with, advantageous deal terms.
So if you were to whip out your crystal ball, which we've all gotten really good at over the past year, and talk about a recovery. On the office side, we think it's starting to happen really towards the end of this year, early next year. Companies are coming back, getting back in office space. Retail's obviously been really hurt, and is the focal point is the pandemic. How long do you think it will take to get leasing back? And do you expect maybe even a spike of people trying to get back in the market in a wave? What's the timing of that recovery?
That's a good question. I think it's going to piggyback actually a little bit behind the overall office recovery. Specifically downtown speaking, a lot of the retail is amenities to the overall office workers. So certainly in the financial core, we need people in these buildings to be able to service the overall retail offerings at grade. In terms of timeline, we'd like to think that we're going to be in a position where we're slowly starting to see retail velocity pick up, specifically on the leasing front, end of this year. And then ideally have tenants be able to kind of fixture over the winter with a spring 22 opening. And hopefully at that point, rampant vaccinations are upon us and we're getting back to work.
I guess that's probably a point to stop in. So for those of you who are watching that might not be in Toronto or even in Ontario. So Toronto is still at this point in the longest, I think the global's longest lockdown, now dating back to November. We are ramping up vaccines finally. We're behind the US, but we're actually ahead of all the EU nations over the last kind of month or so. So positives are happening, a ways to go, but it's kind of what comes first. So we're going to have the vaccines hopefully hit sometime in the summer into the fall. Offices will start opening up again, hopefully fall into the winter. And to your point, there's 300,000 people that come through Union Station a day alone when the downtown core is at full capacity. So you think of all those people who need lunch. Think of all those people who are going to do their shopping there as opposed to doing it back in the suburbs when they're back at home. I think that's I guess what I'm trying to get to is I think that's actually a positive, right? It is going to come back. I think office space, every stat we're seeing right now is people want to be back to work. Will there be changes? Yes. Nobody's going to tell you that's not the case. Will people be back in 5 days a week, 9 to 5? Probably not. But I think there's going to be changes for the positive. They'll be back in. They want to be back into their space. So I think retail, just how quickly it can react to that, I think is a big key. This isn't going to be someone arbitrarily says everyone's coming back to work across the GTA January 1st, 2022, have your retail space ready. It's just how do you pivot accordingly.
Do we have any comps on markets across the US, for example? They're just ahead in time of where we are and seeing some of that recovery?
Absolutely. We were speaking with a prominent New York landlord today, and we're certainly asking them about their market and if they're seeing signs of recovery. And New York rents have obviously been suppressed pretty substantially as well. But they said the last kind of 90 days, they've seen the most amount of retail activity that they've seen in the last 12 months, which is a hugely positive sign in terms of, whatever happens in New York generally follows suit in Toronto, not too far along after. So certainly in the American cities where they're back to business, the retail leasing market seems like it's rebounded nicely, and that there's certainly demand to, start opening up retail stores and restaurants again. So again, it's unfortunate that our vaccination program is lagging so far behind a lot of these American cities, but I think once it continues to uptick, we're going to be in a really good position for a strong.
So that's interesting.
Any retailer on Queen West to get like a fake ID for being 40 or 50, like the opposite of when we kids try to get a vaccine faster, because it certainly helped.
Well, too much disclosure, but I turned 40 this year, so I'm officially available for a vaccination. But yeah, if you're looking to get a fake ID, Michael, I can hook you up, man.
I guess I should have kept that one from when I was 17. It would have made me look a little bit older right now. So this has all been, I find this fascinating, Graham. Thanks again. One or two more questions for you, just while we have you. So I guess the one thing I'm interested in, the flip side to the whole pandemic is everybody's found a way to still get groceries. Everybody's found a way to still get their coffee delivered to the home or found a way to pick it up. What are you hearing from clients? What are you hearing from tenants in terms of not only utilizing technology going forward, they still want storefronts, they still need storefronts, they're finding a way to do things only online. I imagine that's going to have a huge impact.
Like structural changes to the market. That's a really interesting question.
First and foremost, on the urban grocery side, that is one category that we've seen really strong, activity from throughout the pandemic.
Okay.
But unfortunately, the deal cycles of those deals generally just takes a little bit longer. So we haven't seen as many transactions occur in the actual marketplace. But it's a fascinating vertical of retail in terms of all the innovations coming to it. And certainly we've seen a lot of these, mass companies now that are really trying to innovate through technology. I won't obviously name names, but, a lot of these groups now are looking to take over the full food program for a full office building. So they can operate multiple concepts and potentially also have cubby access at each office floor. So for example, with the technology, if everything's funneling through an app, Matt, if you order a double every single morning, the app's going to start picking up on your behavioral technology, it will start picking up on your behavioral aspects. And then every Monday, you would have a cubby that your coffee would be waiting for as soon as you arrive in the office, right? Or if Friday's your day of indulgence and you want to have a hamburger every day or eat unhealthy, the technology would start picking up your behavioral patterns. So I think you're going to start seeing a lot more of that, certainly in some of the newer office buildings with new food and beverage programming taking place.
Cool.
It's interesting to see how that is going to
if Five Guys is delivered to the office once a week, that's incredibly dangerous for me, but I can't tell you, I mind the sounds of it. Mike, I'm sure you have one more question left for Graham. We got about a couple minutes left here.
Yeah, that was really helpful in terms of what we covered today. I think that we covered a lot of the story, how things are structurally changing. Those are kind of the main ones that I had. Matt, anything?
Yeah, maybe just crystal ball again, what leads us back? So is it restaurants that are leading us back? Is it going to be big chains that are leading us back? Or is it just once people return to the core, the floodgates are open and every retailer is going to try to get back into the game?
Yeah, I think the answer to that is the latter. Once people return to the core, we need bodies to obviously drive a lot of the traffic. it seems like there's a lot of pent up demand and certainly capital from all restaurant groups and retail groups, you know, whether it's the national covenants or the independents. So it's just really a matter of being able to open for business, because I think, you know, everyone's dying to get out and shop and spend money and eat out. But we obviously need, you know, the restrictions to be lifted and bodies back in the office to support.
And we'll get there. We'll get there. So Graham and everyone at home, if you're still watching, first of all, thank you for making it all the way to the end. Graham, thanks so much for joining us. I think people are really fascinated right now by retail. To Mike's point, it is still probably the number one thing you read about in the newspaper right now in terms of, you know, the death of retail. I think it's been greatly over exaggerated, but it's certainly going to be a slow build back. So thanks so much for joining us, folks. If you want to reach out to Graham, let us know. We're happy to make an introduction. I think it could be incredibly important to have that conversation still moving forward. And Mike, until next time, thanks so much, everyone, for joining us.
Until next time.
Thanks, guys.
Take care.